Futures trading for beginners. Let's get into it. We got a lot of stuff to cover. No time to waste whatsoever. We're going to be defining futures, both the textbook way and the everyday trader way, which is what we care about here as everyday traders and not institutions or anything else with those old textbook definitions. We're also going to get into some analogies and examples of futures trade. We're going to compare them to stocks. We're going to compare them to ETFs. We're going to compare them to options, get you real comfortable. And then we're going to get you started trading, show you how to get started trading, and then also do some trading of our own on 2 different platforms, tastyworks and Interactive Brokers. So get ready before we get in. Disclosure time, everybody. Feast your eyes on these many words that altogether mean something and individually have their own meanings as well. Basically, futures, like ETFs, like options, like anything, have 2-sided risk. When you buy them, there's risk that it goes lower. When you sell them, there's risk they go higher. And there's a bunch of other words in there. 3, 2, 1. What's on our agenda? We're covering definitions. That's where we're going to start out. We're going to define futures, indexes, every word that is important to the futures trading process. Next, we're going to hit some basic analogies to stocks and options, make you feel comfortable no matter where you came from. Finally, we're going to look at opening a brokerage account and finding the symbols and start trading. Oh my gosh, we're going to have so much fun here today. The boring part is going to be first, but it's essential. You have to start somewhere. You can't just jump into futures and have no clue what they are and just start doing things. But we're going to make it as painless as possible. We're going to define futures. We're going to define the key terms, and then we're going to get you comfortable with those analogies and examples. And then the fun starts. We're going to get trading. Here's the textbook definition for futures. It's what you're likely to find if you've bought, like I have, multiple books that are 1,000-pagers that promise to convey to you the idea of futures and term structure and trading spreads and everything else. This is likely the definition you're going to get. A future is an agreement between 2 parties to transact an asset at a specified quantity and date at a price traded today. We're going to dive into that and define those 4 key terms in there. But as you can see through the very nice visuals that I've put in front of you, essentially today you're deciding with someone else to transact something at a future date. So you're saying, okay, I want to buy corn from you in the future. And thus today we're agreeing on a price of $5 and I'm going to pay you $5 and you're going to give me a certain amount of corn, but that's not happening today. The trade's happening today. The transaction is happening later. Now, let's get comfortable with this idea of an agreement because it's a scary term, okay? Whenever I see agreement or contract, or I guess I should say whenever I used to see terms like that, used to freak me out. But just like options, it's a placeholder. Like it's essentially saying that we're going to do this thing later. And in that idea of options, the idea is usually that like by the time the agreement actually comes to fruition, I've likely gotten rid of that contract. So maybe I bought a future, I bought a call option, and it expires in 30 days from now. That's when the agreement does come to fruition there. I likely have covered it, sold it by that time. And so while this may seem like a big and formal term, like you're going to sign something, it's pretty similar to that options contract structure. It's just a set structure that we can feel comfortable with and just allows us to do the trading, the transacting that we want to do. Now, an asset is anything people want to invest in, hedge against, or speculate on, usually falling under either commodity or financial instrument or security. Now, this is really where the fun begins because asset can be anything. I mean, here in 2021, we've especially learned that an asset can be a cryptocurrency. An asset can be cannabis. Like, it doesn't have to, this is another one of those words that people feel like, oh, there's a set box of assets. And that's no, an asset is anything. I talk myself into constantly the vinyl records that I buy in my free time. Well, that's an investment asset. And while I may be fooling myself, it just goes to show you that assets can quite literally be anything that somebody wants to invest in, or they want to speculate on, they want to buy and sell in the market, or maybe they have in an inventory somewhere, both maybe in a portfolio or even physically like a farmer, and they want to hedge against that asset that they have. Next piece is the quantity. Again, a piece that is standard in the contracts, but can quite literally be anything. And we've really, at the small exchange, taken this to the simplest end, which is every quantity in our futures is just 100. Now, conceptually, in something like corn, this would be bushels of corn. That's how this is defined. And this quantity is part of the contract, and it's what intends to be executed at that futures price you traded at that future date that we'll get to in a second. But it's essentially just the multiplier, right? Here in 2021, we're not thinking necessarily about 1 bushel of corn or 2 bushels of corn or 5,000 bushels of corn, which is the standard agricultural futures product contract size from the CME. We're basically just saying, like, what's the multiplier for the thing? In the same way that E-mini S&Ps, the multiplier is $50. The micro, it's $5. Small exchange, it's just $100. $100 is the quantity for everything that we do here. It's very universal. It's very easy. It's just like if you're coming from options, everything's in 100 shares, right? And so that quantity piece also, it seems like a scary concept, but it's as easy as just 1 ear of corn. And then finally, the date here is a predetermined date and time, also known as expiration, when the future transforms either into the asset itself or cash. And the date is embedded within the agreement or the contract and is usually relatively standard according to the exchange. Because I know a lot of people out there are probably like, wow, conceptually, I have created this agreement with this other one person out there, and we agreed on this many bushels of corn, and I bought it at this price, and the date, I mean, when is this come due? Everything is pretty standard with the small exchange. Almost all of our products, 8 of our 9 products, it's the 3rd Friday, that is expiration. And like I alluded to earlier in the presentation, you usually don't even come upon this expiration date. The idea is usually like, I'm going to buy this future with the intention of selling it before expiration, or I'm going to roll it, a term that I'm sure a lot of you have heard of, and that just essentially means I'm going to close out of this thing prior to the date and move it to the next expiration. And it's embedded in all of these contracts, and like I say, they're all really formal, usually universal. Like I say, small exchange 3rd Friday on almost everything, and hopefully not that big of a deal. Now that we have defined all the keywords here, hopefully going back to this definition is at least a little simpler. Recalling that it is an agreement between 2 parties to transact an asset at a specified quantity and date at a price traded today. We're trading that price today. We're agreeing today. And in the future, we're going to exchange money for asset. And that is all that's going down. Now, let's get to the actual definition of what we're going for when we look into futures. It's a derivative pricing the future value of a commodity, index, or something else as the marketplace of traders see it today. That's all you have to really worry about. You don't have to worry about delivery of corn and all these different quantities and asset classes. It's like, I want to trade this thing. It's got a price today of $30. I can buy it at $30.01. I can sell it at $30 even. And right now, today, there's a future price of it where people think, the marketplace thinks it's going to be in a week, in a month, in 6 months, in 2 years. Some futures going out 10 years in the future. And it's, guess what, going to be very similar to the price of that asset today. It's just going to be a little different. It's adjusting for interest rates, and it's also adjusting for where the marketplace thinks that market is likely to be, because there's a lot of things like commodities or like interest rates. We just had that Fed announcement here today where people think today something is going to be priced at X, but in 6 months, that same exact thing they think is likely to be, X plus 5 or X minus 2 or X plus 1.5. It's really, when you dig down deep into just like what a future actually is, it's where supply and demand meets for the future price of something that is, also accessible here today. We'll get into that idea a little bit further, but first I want to define some of the, not keywords of that definition, but essentials behind trading futures. The first is that index or spot market, which presents the current valuation of an asset that can be unreachable via buy or sell orders. Now, we're sticking with one of the most widely known marketplaces here, which is the S&P 500. Many of you know the S&P 500 index quoted in everything, Bloomberg News, live media, written word media, Wall Street Journal, everything. So many articles referencing this benchmark. The benchmark itself, you can't touch. You cannot buy the index. You cannot sell the index. You can trade derivatives on the index, which we'll get to in a second. And you can trade versions of the S&P 500 that have been replicated. But that index or spot market, a term by and large used for foreign exchange products or commodity products. A lot of times the index is completely unreachable by buy or sell orders, or the spot market is very hard to access. It's either big, it demands a lot of money, or it is very risky, and thus you go to these alternatives, because the question becomes a lot of times like, okay, well, if the S&P 500 is at 4,400 today and the future is at 4,405 or 4,410, then why the heck do I care about that? Why does that even exist? Well, because these spot markets and indices are very hard to reach with just a normal retail trading account. But you do have exchange traded funds that can allow you to buy or sell shares attempting to replicate the index or a commodity. Now, this is usually the access point for passive investors willing to check their accounts, a couple times per year. It's still the place, even though I have biases, I work here at the small exchange, it's still the place that I tell people like my brother, who no matter how many times I talk to him about how much fun it is to trade and how, empowering it is to be an active investor and trader out there in the market, and how easy it is for so many people to access derivatives, be it options or futures and everything else, he ain't going to do it. And so the thing I always tell, well, then open an account somewhere, Tastyworks, Robinhood, Interactive Brokers, and just buy some SPY shares. It's the most passive way to get anything done in the market. Now, the most active thing to be done in the market is to get into the derivative space, of which futures very prominent for so many traders in the past on trading floors at big institutions, and now finally really becoming accessible for us retail and everyday traders. Futures give you direct exposure to that actual index, no replication of it like an ETF or commodity, no replication. I know a lot of people out there probably understand the complications that come with trying to trade a commodity as an exchange traded fund or note. Oh my gosh, those things are brutal. They have drag in them. You never feel like you're trading the actual thing. USO is at $40 while crude oil is at $75. It's like, what the heck am I looking at? Futures give you that direct exposure to the index or commodity via a derivative on top of it. You can trade options on SPX. You can trade futures on SPX, and it has a direct tie to that index. You can trade, options and futures on crude oil, on gold, on so many different things that aren't replications of it, that are the true benchmarks that the Wall Street Journal, all these different places are referencing constantly, and it looks like that index because you're trading it. They're similar to futures are similar to options, and that they can actually reference the actual asset at the source. But futures simply let you buy or sell it. You are getting as close to putting the actual thing in your portfolio as you can without physically doing so. I always tell people that futures a lot of times end up being a lot simpler than options, in that all you're doing is putting the exposure of that index or that commodity into your portfolio from the long or the short side. Another way to view it is that futures are like a positive 0.99 correlation replacement that actually looks like the market that they track. Here, you can barely see it, but in red, you have the futures for the small stocks and you have the index for the small stocks. It trades right on top of each other. And what's really cool about this that I think a lot of people don't necessarily grasp is that red line is simply buyers and sellers meeting. And that black line is the actual, average of the 75 stocks in the small stocks index. And that red line is held close to that black line because no one's willing, if the index is trading at $75, no one's going to be willing to buy that index at $80. And so bids are going to be under there and offers are going to be above there. And so that supply demand, the buyers and sellers keep that thing pretty darn close to the index. And while you can't trade an index or a spot market a lot of times, the futures just give you access to buying and selling right there. It's just like buying 100 shares of a stock when it comes to buying a small stocks future. And this is going to seem repetitive, but it is an apt analogy for all small exchange futures, which is like, it's just like if you were trading a $75 stock and you bought 100 shares of it, or you sold 100 shares of it. It's really, really that simple because we have this $100 multiplier. It's just like trading shares, but in $100 increments. And in the same way that a share amount changes the effects of a market's move on your P&L, so does a futures multiplier. You buy, instead of one share, you buy 5 shares and the stock price moves higher by $1. Well, you don't make $1, you make $5. Same thing here. If I buy the small stocks at 75 and it goes to 76, well, I didn't just make $1 because of that multiplier, I made $100. And that's really the main difference with futures a lot of times is the multiplier effect. And then also, and we're not even getting into this here today, but the fact that they cost less, you get $7,500 of stock exposure with that small stocks for under $1,000. That's much less than 50%, which is usually asked to be put up to buy or sell stock and ETF shares. Now, selling futures of 5,000 bushels is just like selling 5,000 shares. Like I spoke to earlier, the corn futures, which were very popular in spring and summertime as they seasonally are, trading them is really just like trading any stock or ETF, but just with a different multiplier here. If I was looking at it, it's so funny. If there are corn ETFs out there and they're kind of wonky, they don't have a ton of volume, and they don't look like corn prices. What's really nice about this is when corn futures are at 700, which equates, I know it's a little weird, but it's $7. That's the price from the producer's side. That's a price of a bushel of corn. And when you talk about like, you could buy or sell that price with an ETF, people understand that quickly. If I sell that corn ETF, then I want corn to go down. If I buy it, I want it to go higher. Same thing with the futures. It's just closer to that actual corn commodity. Whereas if corn is at $7 and I sell it, I want it to go lower. That's all that I want here. And now the only intricacy is going to be that multiplier there. If I'm selling sevens, I'm selling sevens on 5,000 bushels. And so if we go from $7 down to $6 like we did in June of 2021 here, I don't make $1. I make $5,000 because of that 5,000 multiplier there on the bushels. It's very similar, like I say, to just looking at shares of an ETF or stock. Now, let's get into some of the analogies and examples around options, because I know a lot of you are coming from the options derivative space, options on SPY and single stocks and so many other places. Buying a future is just like selling a put while buying a call, all done at the money at the same time. This is called to a lot of people the synthetic long in options, whereby if a market's at 100 and I buy the 100 call and I sell the 100 put, I have gained 100 deltas in that market. And you usually, because of the leverage of options, people will do that because it costs less than buying 100 shares of that market priced at 100. Futures, the same exact thing, only guess what? It's one trade. And guess what again? It's more leverage. It costs even less than committing that synthetic long in the options space. And vice versa works as well. You know, when you go to put on a synthetic short, you sell a 50 delta call and you buy a 50 delta put, you gain those 100 short deltas in options. You got the same exact thing here with futures. You just sell the futures once. It's one trade, even more cost effectiveness. Let's get into a couple examples here. Buying futures is like buying a call without paying a premium. And like we just spoke to, you can sell that put to pay for the premium to create that synthetic long. But why give yourself that headache when you want to get to a market and get exposure on it and not have to pay for all of the exposure, which is essentially why derivatives exist? Then why would I create for myself this structure where it's like, well, the market's at 75, I'll buy the 77.5 call for $1.35. Now the market needs to get up to 77.5 and then actually needs to get $1.35 higher for me to start making money. Now I put less money into it than if I had just bought the shares. That's really nice, but I need two different things now to happen before I start making money. And oh yeah, by the way, it needs to happen by a certain date because the theta decay is bleeding me dry. Options are great for certain things, but when it comes to big market moves like we're seeing today off of the Fed announcement, and I want to get short equities, I want to get long interest rates, I want to get short gold, I want all these different things, and I want it for cheap because I'm just doing it for a quick day trade or a couple of days. Futures are that static exposure that are really great for that purpose. Buying futures also like selling a put without deltas rising or falling. Once again, just a derivatives trade that lets me get my exposure to the market like equities for less money. But as the market goes up and down, I'm not losing or gaining any deltas. It's staying the same. And I know a lot of people, myself included, get frustrated with this idea of short puts where it's like market's at 75, I'll sell the 70 puts and that'll get me 20 deltas. And that's great. That's what I want. I wanted 20% of the market. Oh, the market moved higher? Great. How much money am I making? Oh, well, my delta's actually dissipated. I've stopped making money. That's not great. Oh, the market went against me and now I'm long 100 deltas? Man, that's not fun either. Futures, if you're comfortable at the outset of the trade with the amount of movement and the size of it, you're not gaining or losing deltas. Very nice static delta trade that costs less than stocks and ETFs. Now let's get even further with an example of buying a market like SM75 priced at $75 with a margin of just over $900. And that's again to that piece where it's a $75 future, multiplier is 100, so $7,500 in stock exposure costing me less than $1,000. That's really efficient use of capital. And the idea with futures oftentimes is like, I want to buy it at 75 and I want to sell it back at 76, like you could have done Monday of this week. Big move lower to kick off the week. Stocks moved down they bounce back the next couple of days, you can take your $100 in profit and you've made 11%. You can't do that with stocks and ETFs because those are designed for long-term investment. You can get 10, 12, 13. I mean, the last couple of years, you've been able to get annually close to 25, 30% on being invested in stocks. Futures, with their lower margins and increased leverage, you can get these returns just day trading. And that's really what we're here for with futures, is active trading, getting in and out of the market when we see opportunity. But also, we can take a bit of a longer term approach. Like if you think that the Fed will eventually hike back to 1%, right now sitting at 0%, you can buy the S2Y futures right now sitting at $2.25, which is 0.225% for all intents and purposes. That's 0% where the Fed has kept us. And you can hold that thing until $10, which is that 1%. Really nice other piece of futures is not only that efficiency of capital where I can get 10% returns on a day trade. Also, we can go into a market that's historically been complex, like interest rates, and demystify it and say, like, yeah, the way I want to think of it is interest rates are at 0. I think they're going to go higher. I'm going to buy zeros and sell them when they're higher. Very simple and straightforward with stuff like the small 2-year yield future, which we'll get to here in a second with our platform demo. And that's all I have for you in terms of getting started with futures trading. All those beginners out there hopefully feeling a bit more comfortable with definitions, key terms, and everything else. Now, how do you get started? I feel comfortable with what futures are now. I want to go in there and get to some crazy strategies down the line with spread trades and all these different things that I can do, butterflies in the yield curve and so much fun stuff. But how do I get started today before I get so far afield? Well, it's a matter of opening an account, and smallexchange.com/brokers is going to show you all the participating brokers that have small exchange products for you ready to go. After I have that account open, I'm sure a lot of you already have one. Just make sure that futures are enabled. It is a derivatives product, so it's going to be a little bit a step higher than your vanilla account that is designed just to buy ETF and stock shares. So make sure that that's enabled. And you can do that at the start of your account, or if it's after the fact, just contact your support and say, hey, I need to enable futures, or I need to turn on small exchange data, which data free from the small exchange. That seems like maybe, oh yeah, data should be free. Some of these exchanges actually charge you for market data, which is crazy. So yeah, if you already have an account opened at one of our participating brokers, just make sure you're enabled for futures. And if you're not, contact support. And if you're not seeing small exchange prices, contact them and they will turn them on for free. And then finally, you search the smalls and send the order. And that's what we're going to get to here in a second, everybody. I'm going to pull up a couple platforms. We're going to search the smalls and send some orders. So stick around. I'm going to grab a swig of water first, and then we're going to get going on tastyworks and Interactive Brokers. Thanks for watching Futures Trading for Beginners platform demo coming up after this. And also keep those questions coming in. I see the chat moving. Haven't been able to reference it yet. We'll get to the Q&A after the platform demo. Thanks so much, everybody. Hold on one second. All right, I'm back. Let's get into it. We just finished what was a great, I think it was a great presentation. Maybe I'm biased because I wrote the darn thing. We're about to get into our platform demo, but I must one more time tell you about joining the Trader Revolution. If you haven't already, join the community here. Thousands strong. We're building by the day. Community.thesmallexchange.com. You can check out 50% off exchange fees for life on all the small exchange products. We're about to be up to 10. We got stocks, we got interest rates, we got foreign exchange, we got cannabis, we have metals, we've got oil, and we're about to add a really nice crypto piece. So get ready for that, everybody. I maybe have already said too much. Mikey's going to get mad at me. But yeah, you're getting 50% off exchange fees on all these products for life. And you're also getting exclusive content, market analysis, standard deviations, and a bunch of other in-depth analytics on all of our products and other competing products as well, helping you to trade, getting all that content and some limited edition merch. Community.thesmallexchange.com. Please join the trader revolution today. And I'm back. Here we are. I am just going to set up now our platform demo for you, and then we're going to get into it. It's going to be really fun. We have done so many of these streams in the past, and a lot of people ask us, you know, like, can we jump into the platform and get things going? And my thing is always like, no, we can't. You know, we're an exchange. We don't actually have any of these platforms. But today, you know, we are going to work with tastyworks and Interactive Brokers to show you how to enter orders in the small exchange products. So I'm super excited to do that. And so let's jump into our platforms here. I will get out of our slide deck if you bear with me for just a second here. Hold on. Hey, there we are. Hopefully that's showing up for everybody. If it's not, fill up our chat here and be like, Frank, you're messing this up. But I think it should be displaying correctly. Mikey, you can raise your hand if I'm wrong. But we're going to start with tastyworks. Now, this is a platform I know all too well. I've been trading on here since the day that tastyworks launched. I was at Tasty Trade prior to the launch of tastyworks. So hopefully I don't make a fool of myself. Now I've really raised the bar. If I do mess this up, then we're in trouble. Now I have the 2-year yield futures up here, and I have it up dually because we just had a Fed announcement, and you can see the action in there. The last hour or so, we've seen this market rise more than 10% and then give back a good amount. What's really nice about, I know we're just demo trading and I'm going to show you how to enter orders and everything. What's really nice about this product is it rose close to, 15, 20% and then gave back half of that. And that was a rally, everybody, of about $30 and then a sell-off of about 10 to 20. Really great spot for your first foray into futures is the small 2 years, because this is a $250 product. You can't find in any futures exchange a futures product that's under even $1,000. A great place to start. So what you're going to do after you open a tastyworks account, you make sure it's futures enabled. They've got the small exchange futures on there. Is you're just going to search for the symbol. Now, smalls on tastyworks, futures on tastyworks in general, are going to start with a /. So you type in that / and then the symbol, you can see it's already populating with a bunch of different markets. The symbol from the small exchange is going to be an S or an SM and then the products code. So with the 2 year that you're already seeing, it's S2Y. Now that's enough. Already you can pop that in, you can press enter, and it'll show you the futures that you should be trading, which is called the active month. For all intents and purposes of today, I'll go even further and show you that the next piece after the / and the product code is called the month code. And so it's September. I don't mean to scare anybody, but active trading is in the October futures for all smalls right now. And October is V. Now, you can check online by just doing a couple Googles what the specific month code is for every month, but just trust me that October is V. The last piece is the year code. We're in 2021, so it's going to be 21. So I type that in, I press enter, and I'm here. I've got a chart in front of me. You can go to you can go to the trade page. This will soon be filled with options on our products coming very soon. But just to display the historical data, I'll stay right here. And you can see that the market earlier today was at $2.30. It climbed all the way to above $2.60 and now is kind of middling around $2.50. Now, the same way that if I type in Apple and I want to buy a share or I want to sell a share or what have you, I'm just going to click on the ask if I want to buy. And this will all auto-populate, and it'll show me that I'm going to buy 255, which is that offer that I just clicked on. And once again, while this is a demo of just like how you enter the order, this is, if I was a new futures trader, this is exactly what I would do, because this product is so small. It is, I'm not even going to get in trouble from compliance. This is the smallest futures product in existence. And so I can feel comfortable knowing that if I buy or sell this thing, it's only going to move a couple of bucks in the next couple minutes. So I clicked the ask price there. That's going to auto-populate all this stuff with buying. And you can see sell here is not where we're at. If I wanted to switch things, I can go right to selling, and it's going to sell at 253, which is the bid. All making sense, hopefully, to everybody so far. But let's stick with buying at 255, where the market's offered at. You can see here, this is the buying power effect of the trade. Once again, no futures out there are going to give you a buying power effect under $100. Really nice first place to start. And all I'm going to do, send this order in. You can see the fees and everything. So commissions a quarter, fees here 24 cents. I don't even know if this account actually is, yeah, it's not a community member. So these fees are even lower for community members out there. Send this thing off, and there, boom, we got filled. We actually got filled at 254 because the price came down a little bit while I was spieling there. Got an even better price. And so now I'm long this S2Y future. And you might be thinking, wow, Frank has got real steady hand here. He's not freaking out or anything. And it's because this market, like I say, is relatively small. I'm long $254 worth of 2-year yields, and it's not going to get away from me. This today already being up 20 cents is a big day, and that just kind of lets you know that in the next couple of minutes, we're likely to only move, 2, 3, 4 cents, which is $2, $3, or $4. So I'm long at 254 right here. That's where the offer is, and if I'm getting a little uncomfortable, or, this is the demo, so all I want to do is execute my first futures trade. All I need to do, market's one tick wide, is go in here and sell the 253s. Boom, boom. I'm flat. I've got no exposure in the market now, and all I did was lose $1. That's pretty much it when it comes to entering futures orders. I feel bad oftentimes because futures, I think a lot of people are expecting to be extremely complex, and they are complex in their own way. But it's really as simple as if I bought those 254s and I wanted to hold on to them for the next couple of minutes or hours or days. What I essentially want is I want those 2-year yields to go higher. I bought 2-year yields. I want them to go higher than 254, and then I'm going to sell them back. What I would normally do is when I'm day trading here, is say I buy, and now they've moved a little bit lower here. Say I buy the 252s, right? So I go in here, I do everything like I just did. Oh, now it's 253 offer. I got to buy the 253s instead of or I could, actually, yeah, let me do that. I'll show you. I could work the 252s. So now what you're going to see is, and that's really cool, is that's my bid right there. That's 252. I am the one lot right there. You can see the size. It's 1 by 2. 2 people offered at 253. I am the one lot sitting at 252, and I could sit there and I could work it, and I could wait till hopefully the offer comes down and fills me. But the thing is, if I'm working that order, I may never get filled. Say 2-year yields just continue higher. Well, then my bid is just going to sit there, and it's going to work, and it's going to work, and it's going to work, and then the market's going to close at 4 p.m., and my bid's going to go away forever, and I never got my 2 years. So you can go in here, and you can go into the activity tab, and you can see all of my little small trades, and you can go into working, and you can replace it. And what do I want to do? Well, I just want to get the thing filled. Or did I just get it filled? Oh, I did get filled. Awesome. I got filled at 252. Great. Don't need to replace it or anything. I can get out of this thing. And so if I am day trading and I want to be long, and I'm long those 252s. Now my next thing is likely to go in there and set an order to sell. Say I wanted to make, $10. I bought the 252s and I want to make $10 today. I put in this order to sell above the market, and I put my order is working at 262, and that's where I'm looking to get hit. Now, the only thing left to do is to watch the market. If it comes down to 242 or 240, I'll take my $10 loss and move on. It's really that simple, everybody. I buy the thing, I want it to go higher. If it does go against me, I'm managing my day trades for losses. Really that simple. Now there's the active trader tab and all these fun things, the pairs trader. Oh boy, I could spend hours on there. We don't have hours, so I can't get into all of that. But everything is really the same process here. And what I would advocate for everybody doing is adding all these names to your watch list. Add the small stock 75, which had a real fun day here. Let me put the chart up. This is a really nice one where I can zero in. We saw the big sell-off here on Monday and then the big bounce back. Hopefully a lot of people got into that. But you can see this right off the FOMC rally from below 77 all the way to 77.5 and then came all the way back. Like, that's a great day trade to get on the other side of that. Would have loved to have been doing that, but was getting ready for today's presentation. A lot of great day trades in all these different markets. You got US dollar as well, big sell-off and then rally, and it's all the same thing. If I want to buy the US dollars, I'm just clicking this offer, $176 to get US dollar exposure, review and send, and then I set my orders to get out for profits above the market, or I'm watching it to take my losses if it moves against me. So much fun to be had at tastyworks, but I must move on to the next platform du jour, which is Interactive Brokers. So let me move that out. And after the Interactive Brokers, if there were some questions on the tastyworks platform, we can get back in there and hopefully answer them. But I want to at least get this done before the 3 o'clock hour here Central Time. So a very similar setup. Like, you're not going to find a platform where everything is absolutely crazy. Excuse me one second. And like, oh wow, this platform is going to make you jump through hoops to find the product and trade it. You got a pretty similar setup. You got a bid, you got an offer, you got a watch list of prices that, once again, I'd advocate for you. Just one time, you put the small exchange markets in there, and you can see this infinity symbol. You can see this infinity symbol just indicates that I clicked the continuous contract when I searched for it in Interactive Brokers. And if I put that continuous contract into my watch list, then it's as easy as just boom. I click it and now it's all here. My chart's here. My bid and offer is here, ready to trade. Very simple stuff. If I put everything in the watch list once, easy to access. If you're searching for things in here, you just you go into the window and you can type in the names specific to them and specific to Interactive Brokers, just like we did in tastyworks. You can see here a little different, similar though, which is no forward slashes. And instead of S2Y, it's 2Y SME. Instead of SM75, it's 75 SME. So a little different, but once you find them once, you put them in your watch list, all is said and done. And so here, let's actually look at sticking with the SM75. Now, this is something that is bigger. It's going to have a margin not of under $100, but I think right now around $900. And this is going to move around a lot more. You can see today's session where S2I has moved $30, which is equivalent, to 30 cents when you're looking at prices. This market has moved about $2, almost $3 today. Actually, yeah, $3 high to low today. That's $300. So, equities move a little bit more than interest rates. I wouldn't advocate for this being the first place to start, but after you get a little comfortable, this is a real fun one. You can see here, market's up 2.25%. That's a big day. It was up over 3% today, and it's come back. Really nice day trade in there. And so all I need to do here is click sell if I want to sell, or buy if I want to buy, and then submit the order. So let's say, stocks are higher today. I think this rally is overbaked. I need to go in there and sell. I'm going to sell these 76.90s, submit the order. Now, I would say to keep this window up as you're learning here, because it is kind of like a double check. It's like, are you sure you want to do this thing? But after you get comfortable, you can click don't display this message again, and then after you transmit, they won't give you this this stop here before actually transmitting. But yeah, then I just click transmit, and see now the market has moved a little bit lower, and it hasn't filled. It's 0 of 1 because I'm offering, I believe, at like 76.89. Yeah, you can see I'm in there offered at 76.89, and the market's just below it. So hopefully they'll come up and fill me, and I'll be short the small stock 75. It's really that easy. And now what do I want after I get filled? I just got filled. There we go. I want the stock market to move lower, and you can see here it's sitting in my activity tab, the same as tastyworks. I am short 1 small stock 75, and now that I'm short the market, I'm going to go in there and put in my buy order to cover it just a lot lower, and I can change the price, I believe. There we go. Isn't that nice? I can change the price down here. So I sold pretty much the 76.90s. Let's say I want to make 50 bucks. So if I sold the 76.90s, I am going to buy back the 76.40s. Ding. And also I can change this to a good till cancel order and let this thing work through the next 24 hours. But I want to keep an eye on it, make sure. And I'll see we're already up about $5 off of that 76.90 number. Once again, giving you this. And now my order is in the market. It's telling me that it'll be canceled at some date in the future. Don't care about that right now. And so, yeah, you can see I'm not filled because the market's not down there, but I've got my order in to buy. We're already up about $10 in our short SM75 trade. Very nice. And that is the Interactive Brokers platform. Now, both of these platforms have a ton more stuff to do. You can pop out those charts, put a bunch of technical analysis tools on there, Bollinger Bands and everything else. But you, for the intents and purposes of today's demo, I just want to show you how to find the smalls after you've opened an account at one of these firms and how to trade it. Like I say, it ends up being a little underwhelming because it's just like, oh, you buy or sell it, and it's really cost effective. That leverage is really nice. We got 2-year exposure for $75. That's awesome. And after you buy it, you want to sell it back before expiration. After you sell it, you want to buy it back before expiration. If you want to take the thing through an expiration, all you need to do is get rid of your Octobers. Say the 3rd week of October comes up, I get rid of my Octobers, and then I put the same trade on in November. That's the next month. That's the next trade. It's really as easy as that. That's your platform demo here for futures trading for beginners.